Two business owners can make the same exact profit, and one of them keeps way more money, not because they cheated, but because they structured differently. One stays a default LLC and runs it in the default way, but the other one knows the rich person move. And that's when the math makes sense. You don't just stay default, you upgrade the tax structure and you keep more cash to compound. Same business, same profit, different structure, different wealth. If we haven't met, my name is Kingsley Affetti. I'm a CPA, certified public accountant, and I specialize in proactive tax planning for business owners and high-income families. Over my career, I've helped advise clients across more than 40 states, representing over $300 million in combined revenue. So I've seen exactly how wealthy families structure their businesses. And today I'm going to show you why the rich use S-Corp taxation instead of just staying a default LLC. And quick disclaimer before we hop into it. This is education, not personal tax advice. Your state, your numbers, and your situations matter. I'm not your CPA unless you hired me. This is purely for educational purposes. One thing I've learned after years working with clients is this. Many people focus on making money, but the rich focus on keeping money. And then they focus on using that extra cash to buy assets and not liabilities. So this video is not about the TikTok hack and all this TikTok advice. I'm going to give you the real information you need to know to level up your wealth, move into an S-Corp, the do's and the don'ts. So let's go and hop into it. The do's and don'ts about the S-Corp system so that you can capitalize it for you and your business. This is about the system, how rich people structure income to reduce unnecessary taxes, look better to banks, reinvest faster. So let's talk about the roadmap and exactly where we're going to go so that you can follow along well. We're going to talk about when it's worth switching to an S-Corp with quick math that you can do today. And we're going to talk about the rich system, bankability, reinvestment, and how the money should flow from your tax savings. Let's start with an LLC because LLCs aren't bad, they're just misunderstood. What is an LLC? Simple and clear. LLC stands for Limited Liability Company. And what it really does is gives you legal protection. Meaning if your business gets sued, the goal is that your personal assets aren't automatically on the hook just because you own the company. And that's why LLCs got really popular. They're simple, they're flexible, and they're affordable to set up. But here's what most people don't understand. An LLC is a legal entity, but your tax treatment depends on how the IRS classifies you. By default, a single member LLC is usually taxed like a sole proprietor. A multi-member LLC is usually taxed as a partnership. And what's the problem with that default once you start making real profit? The answer is self-employment tax. Self-employment tax is what makes LLCs feel dead. Let's explain self-employment tax so you can understand it a little bit more cleanly. Self-employment tax is basically Social Security and Medicare taxes for self-employed people. Employees still pay Social Security and Medicare, but here's the difference. Employees split that cost with their employer. Self-employed people cover both sides. So the self-employment tax rate is often described as 15.3%. So let's take this for example. If your business profit is $100,000, self-employment tax alone is over $15,000. That really feels like getting punched in the face. And worst, it climbs as profit climbs. This is why a lot of new business owners get blindsided. They form an LLC thinking they did the right thing, and then tax season comes and they realize that the default structure is very expensive. So what do rich people do? They don't panic and they upgrade the structure. What an S-Corp actually is and why people explain it wrong. S-Corp equals tax election, not legal entity. This is the most important sentence in the whole video. An S-Corporation is not a legal entity. It is a tax election, meaning you can have an LLC legally, but for taxes, you elect to be taxed and treated as an S-Corporation. S-Corp typically is on a federal level, right? And then your legal entity is going to be formed on your state level. I need to form an entity, usually LLC, then I file for the S-Corp tax treatment. And here's what an S-Corp does and does not do. It does not eliminate income tax. It does not necessarily make you tax-free. What it does primarily is it reduces your payroll tax, or in other words, self-employment taxes, by changing how your income is classified. This is exactly how the S-Corp works, and here's the engine. This is why rich people love it. S-Corps allow you to split your income into two buckets: salary and distributions. Let me explain it simply. In an S-Corp, the owner who works in the business gets paid in two buckets. Bucket number one, W-2 salary. That goes through payroll and it gets hit with Social Security and Medicare taxes, just like normal, just like every other employee. But bucket number two is distributions, and this is where it gets a little bit spicy. The remaining business profit paid out to the owner is typically not hit with those same payroll or self-employment taxes the same way wages are. The strategy is to be put on a reasonable salary for the W-2 payroll portion and then take the rest as much as you can in distributions. And that's why rich people like it. But here's the part where people get greedy and start to mess up. Reasonable compensation. The IRS requires you to take what is called reasonable compensation. Translation: if you work in the business, you can't act like you don't. So no, you can't make $300,000 and pay yourself a $10,000 salary and say, I'm just optimizing. That's not necessarily optimizing. That's creating more problems down the road. And rich people don't win by being reckless. They win by being defendable. So how do you decide what a reasonable salary is? Deciding a reasonable salary is the secret sauce. Here's the method I teach a lot of my clients. It's a 3-factor method and it's really simple. Point number one, role. What do you actually do in the business or for the business? 2, market. What would you pay someone else for that role? So in your same market, your geography, what would you pay someone else to do that role? And 3, time. How many hours are you actually working? That's it. And then document it. Have logic and reason on why you're paying yourself that salary. It can't just come out of thin air. When you document, that is the strategy. Now the next question is the big one. Here's how you know if it's worth switching to an S-Corp. Creating and maintaining an S-Corporation can be expensive. Understand this. S-Corps have compliance costs. You're paying for additional payroll service that you need for the S-Corp. Filings for taxes become more complex. Bookkeeping complexities can increase. And with tax preparation, you're filing an additional tax return called Form 1120S for the S-Corp. So all of those fees, including additional state fees, depending on where you live, can be more expensive than a simple LLC. So the question isn't, can the S-Corp save me money? The question is, will it save me enough money to justify the added cost and complexity it comes with owning an S-Corporation? So here's a few examples to figure out if an S-Corporation is worth it for your example. Let's run 2 quick side-by-side examples because I think this is going to make it click instantly. Here's the rule of thumb I use when talking to my clients. When you're around $50,000 of profit or more in your business, the S-Corp typically becomes a real conversation because now you're starting to feel the self-employment tax hit enough that the tax savings outweigh the cost of maintaining the S-Corp structure. So example 1, let's just say your business has a profit of $30,000. If you elect S-Corporation status, you'll need to run payroll, keep cleaner books, and file an additional 1120 S-Corp tax return. So your annual compliance costs might be an additional $2,000 to $4,000 depending on your setup and your CPA. Now here's the problem. At $30,000 of profit, there usually isn't enough gap for distributions to create meaningful savings after you pay for the extra compliance. So you're basically paying real money to run a structure that doesn't give you a real benefit yet. So that's why if you're making less than $50,000, $30,000 of profit in this case, I usually tell people don't rush to S-Corp. Focus on growing the profit first. Now, example number 2, let's just say your profit for the business is at $60,000. Now we're cooking with a little bit, okay? So now you're in the range where an S-Corp can actually start making sense because there's enough profit that the payroll tax optimization can begin to outweigh the compliance cost. If your business is at a profit of about $60,000, that means your tax savings alone in self-employment tax is about $9,000. Like I said before, If the added complexity and compliance cost is $2,000 to $4,000, now we're creating a gap because now you're saving $9,000, though you're spending $2,000 to $4,000 to maintain that structure. That's when the real savings start to begin. So the real question isn't, can an S-Corp save me money? The question is, does the tax savings justify the added cost, and can I create a gap where tax savings now are more than the compliance cost? And that's why I say at $50,000 of profit, that's the zone where you stop guessing and you start really feeling the positive impact of having an S corporation. So let's get practical. How do you actually set an S corporation up? Here's the step by step. Step 1, you need to form your legal entity, usually an LLC. This is done at the state level, typically through the Secretary of State at your state. So step 2, you need to get an EIN just like you would with any business. You can get a free EIN number from the IRS website. Go ahead and check the links below. I'll link where you can get a free EIN number directly from the IRS. Step 3, you need to file Form 2553 to elect S corporation status. 2 things to keep in mind here. You have to have a wet signature for this form, meaning they don't accept electronic signatures. Then on the form, it gives you instructions on where you need to fax it. You have to fax this form into the IRS using the right fax number depending on your state. Step 4, you need to set up a payroll provider, whether Gusto, ADP, Paychex, QuickBooks, whatever you use to run your payroll, and you need to pay yourself via W-2. Step 5, keep clean books. Now that you are on salary as a W-2 employee and you have distributions, you want to make sure that your bookkeeping is accounting for that difference correctly. Step 6, set a distribution cadence, whether that's quarterly, whether that's monthly, but you need to have a consistent way of doing distributions because we do not want to create cash flow problems down the road. One more thing that I've learned with S-Corps over my time is that S-Corps actually tend to help you a little bit with bankability and reinvestment. And let me explain why. Banks do not lend based off of vibes. They lend based off of documentation, and S-Corp creates a ton of it. A lot of business owners make money, but they look broke on paper. Random deposits, messy books, inconsistent income. So when they want to buy assets, real estate, a building, or another business, the bank says, we can't use this income. But the right way to do it is by running clean payroll, clean financials, and clean tax returns. The tax savings is a great benefit, but bankability and reinvestment is the multiplier. So let's talk about reinvesting tax savings. Now, this is where real wealth explosion is taking place. Now, once you've used an S-Corp to save taxes, it's what you do with the tax savings that separates most people. Most people save the money or they spend it, but rich people use the money to buy assets, to buy things that will make them more money in the future. They treat the tax savings as investment capital. They set rules, they automate investing, and they build reserves. That's how real wealth compounds. So let's recap. Here's the flow. You need to be doing this on a monthly basis. You need to track your profitability for your business, set aside the proper amount of taxes, put yourself on W-2 and run payroll, create distributions on a schedule, and use those additional tax savings by reinvesting and investing automatically to build your future. That's your structure. That's it. And that's how 2 people with the same amount of profit end up with 2 different types of wealth. A few mistakes to avoid. Mistake number 1. Electing S-Corp too early. You don't want to do this. If you're at a loss, typically an LLC is better because now you're able to take losses without affecting basis and all these confusing words that us CPAs love to throw around. Talk to your CPA about, is your loss affecting your basis? Mistake number 2, not running payroll. I see this so often. People go out and create an S-Corp, but there's no owner's pay on the 1120S. This is the quickest way for the IRS to pull your return and to audit you because it's a simple thing for the IRS to catch and see. Mistake number 3, unreasonably low salary. Like I said before, there has to be logic and document the logic that you took to reach your salary number. Mistake number 4, no setting aside money for taxes. Mistake number 5, messy bookkeeping. The bookkeeper or you, whoever's doing the bookkeeping, is not tracking why you're getting paid out. Like I said, you have to understand there's 2 different buckets and account for them accordingly. If you can avoid these mistakes, the S-Corp tax strategy will work the way it's supposed to. I really hope that you have enjoyed this video and that now you understand why the rich use S-Corps instead of LLCs. If you've enjoyed this video, Go ahead and click below and I'll give you my free 7 tax strategies that you should implement this year. Don't forget to like, comment, and subscribe. And if you know someone that you think this video might help, send it to them and share the love. Can't wait to catch you in the next video.